Back in the saddle again. Socialists do it again in America. Turn our banking system into a circus act as usual. What else is new, you know? Honestly. You would have thought they would learn something. You know, the planet in general. You know, wheelbarrows of cash, buying a loaf of bread, National Socialists. But somehow or another, they always equate it to capitalism. I don't understand how. But they do. And here we are. And as yesterday as I was saying, it's a QE world after all. And that's exactly where we're at. So anyway, let's see what we got. There's the Robin. Hello, Robin. Hey, Dolo George. Now they got to dance again. They took all these, you know, how many years did I complain about the zero interest rates? Until Mr. Trump got into office. And as soon as he got into office, they knew how to raise rates with no problem after 8 years of Mr. Obama. You know, the socialists think that they can spend other people's monies forever and ever, like Disney World, you know, forever. Fairy tales come true, blah, 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 blah. You know, honestly, it just seems like a joke. I would assume this is starting to tell us, we see the Fed CPI, month over month, up 0.4%. Estimation was 0.4%. As you can see on the screen there, you can see how the stock market right there took a little dip as soon as the news came out. Bang-a-roo. And then you can see it drove back up to the highs of yesterday. I think it was the highs yesterday. Was it yesterday's highs? No, I think yesterday's highs were in the 70s. They hit the 40s, backed off again, playing around. I would say that you can basically here February core CPI 0.5% versus the 4% actual estimation. So not much of a difference. I would just guesstimate, as from my experience from the marketplace, they raise a 0.25 percentage point next week, and then Mr. Fairy Tale, Mr. Powell himself, comes out and tells us how transitory increasing rates will be. In other words, it's transitory now, probably that the rates will be increased anymore after next week. So we're probably looking at the interest rate increases in the rear view mirror, or for some, that backup camera thing that's always fun to watch with the red and the yellow and the green backup things. That's always fun to watch. So, you know, I think that's where we're at. And then let's see what you can see. The stock market slowly drifting down, You know, this is probably some of the longs probably saying, let's take some profits. And some of the shorts, this is probably some of the shorts like that have been short for months now. Like, oh, damn, like maybe I should try to buy something here because my investors keep on giving me money to invest and I keep on buying bonds. And now bonds are going down and we're going to take, actually buying bonds at 5% was probably a good idea solely because now they're probably trading, well, we've seen it. The bonds are trading in the 4s. I was going to put that up yesterday, but it was such an entertaining day of it's a QE world after all. And so we saw Barney Frank this morning and last night. That was fun to see. Barney Frank was the father of the QE dilemma, I guess you could call it, or the QE era. He's the father of it. He was the ranking Democrat and chairman of the committees that kept on allowing borrowing and creating CDOs, collateralized debt obligations. He thought this was fantastic. He was on yesterday and this morning telling everybody that Mr. Biden is wrong. It's not Mr. Trump's fault, and that the insolvency, is more of irresponsible banking, not regulations. You know, Mr. Frank has learned his lesson now that he's out of Congress. You know, that's good. You know, that's a good thing. You get one of these socialists out of the Congress. It's always helpful because of the ideas. Yo, J.A., what's happening? Hi, Doc. I'm still on trip. You're on a trip? Cool. Like acid or mushrooms or what? What's going on there? And we'll just listen it lagging. But wow, okay, you're on a holiday. You're on holidays. They used to say in school in England. You're on holiday, but want to say you a little high. That's so nice. Thank you, Ja. I'm on trip, just listening. Oh, I got a repeat there. Yeah, boy, is there a repeat? I hear you. Well, I hope you have a good holiday, and I'm glad you're tuning in. And the crazy politicians have learned another lesson. I guess that's the best way to look at it. They've learned another lesson. So I don't know how much more. You stole their gold. Gold. Last bank holiday in U.S. was in 1933. Okay. Basically, what it comes down to. Comrade? There we go. Someone's telling me about brick stocks or something of that nature. Anyhow, I'm glad you're on holiday. That's a good thing. You're missing some real wild fun. So I don't blame you tuning in once in a while just to see what's going on. You know. Oh, good. You're in the Czech Republic. Boy, I'll tell you, I hear positive and nice things about the Czech Republic. I hear a lot of good things about Latvia. I hear a lot of good things about Slovakia. You know, they're really doing some really fine stuff, you know. And it's, hopefully everything will be, pretty much the way it is after you get back home. But what it looks like to me is that they're going to have to raise rates just one more time, one more time, just to not confuse, not to confuse the markets too much, because they really don't want to freak them out, So we're going to see how this all plays out, but you can see the stock market is kind of stalled out here. It's almost like we could throw a line up there real quick. But it's almost like a rotisserie chicken, it's right down the middle from the distance from here to the distance from there. And at the same time, it tried to do it there, then it comes here, then it goes there. It's like, yeah. That is true. And so what else can we say about that? I guess we should go over to the dollar. There's the dollar index. You see it on J4X. Moving down a little bit on the weekly. Yeah. And then we go over to the daily and take a look at it there. You can see there, same situation. The dollar is moving down. That means that the interest rates are dropping. Yay. We've been begging for that. We want to see a dollar in the 97, 98 area, not the 103 area. We want to see it there, Really would like to see it down in the 94, 95 area. And I'm sure we'll get there. Sooner or later, we'll see the movement move in that direction. Let's take a look at it over here and check out the. Let's see, where's that? Let's check out the where's it at? Right there. We're going to put the dollar up. We can put the dollar up there first, and just take a look at what the math is showing us on it. And like there we go. And then let's go to the dollar index itself. There it is. Huh. So there it is. You can see a second day in a sell. Still in the weekly buy though. You see that strength in the weekly buy. It doesn't seem to want to let go. That's what we're really waiting to see is I'm listening to these guys, see what they have to say, because they have to choke on some words, and I like listening to them choke. CPI February CPI year over year is 6% to 6%, so that's cool. At least it's stalling out, probably from the lack of growth. Let's see now. What else can we say about any of this? All right, I guess that's about it when it comes to the indices. Just that you can see here the strength here. You can see over on J4X. We can see on a weekly there. J4X is trying to roll over a little bit in here. You can see the green line breaking down. You can see take the fast moving against the slow. At the same time, you can see here, it's been going on for 3 weeks at this point. And so you can see here we have curved, and for 3 weeks, almost 4 weeks now here, we've been on the curve. We're just touching the manifold. We can see the fast. Let's put the zero line in here. Where is Mr. and Mrs. Zero line? Oh, I need to fix it like that. There we are. And there is the zero line. There we are. So you can see here, the fast has broken through the zero line, and you got the slow breaking the manifold. So we're seeing some real downside pressure. I think that's just a confirmation that we're going to see interest rates drop. And you know what, JA? More than likely, you'll see lower interest rates when you get home. That's what's going to happen. I would imagine, like I said, I expect to see another quarter point increase, and then Powell Bang will come up with some type of. They'll try to do some type of statement, something about this, that, and the other thing, and they will be on top of it, like white on rice. They will be paying attention to everything, like they always say they are. But I think at this point in time, interest rates are transitory. That's where I think they are. Interest rates, that's going to be the title today. Interest rates are transitory. Indeed, indeed. All right, let's go over to the Euro traders and see what's going on in the Euro. And there she blows the great right. Oh, that's the S&P 500. Look at that. That's trying to turn up too. We'll go back to that in a little bit. You can see the strength in the weekly there. But let's get over to the Euro. Euro up on the wall. Bingo, bingo, bango. There it is. It's a third solid day on the buy. We are now with the fast-moving fast-moving algorithm and the slow-moving algorithm, which are smoothed by stochastics, that's for sure. That tells us right there that it's trying to, not counting Poincaré, you can see that trying to move up. But in the end result, as we say to Mr. Gauss, it's all good here. And you can see that. That's interesting right there, that high point curve. Maybe we'll get a little topping out in a day or two. But I would assume they're going to have to readjust. A lot of money managers and a lot of people are going to have to start readjusting their thought about interest rates. And so we've declared it here at Dukascopy and Swiss Bank. Interest rates are now transitory. As anyhow, now we go over to the British pound. Let's see what the British pound's doing this morning. The heads are really spinning in all directions. I love it, because we're usually right and they're usually wrong, so it really excites me. And that's always even more. And when I can see my P&L not always going up, but when it's going up, which it does a lot, more than it goes down, I can tell you that. Many more times, 7 to 1, 8 to 1, 9 to 1. It's always nice, to not only see it in my P&L, that's the profit and loss for you out there that don't know what P&L stands for, and I'm just so excited that the socialists have totally blown up at this point. In other words, we have a saying around here: go woke, go broke. All right, we'll see. Because also I understand that now they're going to allow an auction on SVB. that Mr. Biden's put pressure on the FDIC, the Federal Deposit Insurance Corporation, yesterday morning. Not yesterday, I'm sorry, Sunday morning of sometime, like around noon, I guess it was. Put pressure on them not to auction off SVB, and they wanted to pick who was allowed to buy it. Now that's going to go under investigation by the new Congress. So all of a sudden that has stopped, and now there's talk of a correct way of unwinding this, not the classic crony capital / socialism. I mean, you can't make this stuff up. It's amazing. I mean, if I made this stuff up, people would say you got to wear tinfoil on your head. But here we are. We're watching it live happening. All right. From there, let's see. Oh, let's put the cable up on J4X too. Let's see what they're doing with that right there. It's around here somewhere. There it is. And there is see cable trying to lift up into that weekly. You see the fast moving stochastic has moved, or the green line has moved a couple of weeks ago. And for us, same situation. A couple of weeks ago, we got going up there, and then you could see, I mean, like the fast, even 4 weeks ago, the fast broke the manifold, and on the bottom side coming up. So we're seeing that same situation here, which is nice. This is why we have J4X and this system, what I call they can call it the Doc indicators, but I like to call it the Doc's Manhattan indicator. That's what it is. It's the Doc Manhattan indicator. And you can see the same action goes on right here with our algorithm. So this matches it up. It catches that smooth part. It's only a few hours behind us, so it's not that bad. All right, and remember, traders, if you shorten the duration, the length of time itself, then it obviously becomes more accurate. All right, we've seen it with a 1 minute chart. It can be anywhere from 2 to 3 minutes behind. That's it. That's not too bad. All right, now from there, we slide over to the Swiss. Isn't it nice to see the Swiss gain against the dollar? Makes you just feel like things are getting back to normal. I just really hate it when the Swiss, looks so helpless. It's like very disappointing. I'm not a anti-Swiss person, so it's like, no, Swiss are supposed to be solid bankers. Would you believe somebody came out yesterday? I have to take a sip of my tea just to say this. My throat needs lubricating to say this. Came out and warned us about Credit Suisse, and that's the next shoe to drop. And I'm like, Credit Suisse has gone from $60 a share, and it's trading at $2.50 or $2.40 today. I think it's already happened. I think someone should tell this fellow that when he said that, I was like, what the hell is he talking about? It's like crazy, And so, it's totally oblivious sometimes. You just got to wonder how oblivious it is. It is they're oblivious. Their level of stupidity can't get much stupider. Honestly, it always blows my mind that they, that level of stupidity, it really does. I don't, and the sad part is that the media, the person, reporting it at, talking to him at the time, had nothing to say, and I'm like, tell him, it's trading at $2 a share. It's already happened. It's done. It's over with. It's bank-o-rupt. It's bank-o-rupt. Really. And so that is really what blows my mind sometimes, is that that's exactly the level of ignorance, the total level of ignorance. And there's no changing it. And I guess that's probably why I enjoy doing the webinar, because, I'm sitting here, I know for a fact that, what sometimes some of the things they're saying is totally wrong. That's the amazing part. It's just totally wrong. So, you know, it blows my mind. It does, but there's no dealing with the stupidity when it comes to the financial markets. The level of the stupidity is great. So, we sit there and we hear this stuff, but there is no dealing with it, I mean, they just, you just can't, you cannot, you just can't, as much as you try, try to explain these people these things, it doesn't go through their heads, But anyway, that's the way it goes there. So now from there we'll slide over to, I guess we go to the yen, and I would imagine the yen is looking the same way. Let's see if we got any no more questions either. Okay, I've probably driven you all too crazy today because I'm just so happy. I'm enjoying this all, All right, let's take a look at the yen. All right, yen, yen, yen. There we go. And you can see the yen there, doing the same thing as the Swiss, which is really nice, And let's put it up over here. There it is. Now you see here it's bouncing up, whereas the Swiss was still at least flat to down. A little bounce here today. And then you can see, the weekly trying to break down a little bit here. The fast is dropping, but look at the slow. The slow is above the manifold. The yellow lines are the nonlinear time manifold. And while they're above it, remember, we're measuring an object on a surface. This particular object is the Japanese yen against the dollar. But the surface, we're not really sure what the surface is. We just know that it predicts it. That's it. That's about all I can say about that because I don't know any more than that. And I can get really tinfoil about it at times, but it's not really worth trying to explain that. But that's what this is an object moving on a surface. And that surface is what I have no idea of, but it shows every day accurately along. When it turns up through those zero lines, this thing has a way of finding value on the upside. And vice versa. As it breaks down, it has a way of losing value. And then obviously we went into the sell off of this one on a day-to-day basis, as you can see right there. And then it finds a way to break down. So the yen, it's I guess you can say about the yen is that it seems to march along with the Swiss, but nowhere near as strong. But you know what? It's not like the Turkish lira. My goodness, when the Turkish lira, when it goes to like 5 or 7 or something like that, or in this case here, it's, the yen is trading at 1.336 or something like that, to the dollar. It's not 136 to the dollar. It's a 1.36 to the dollar. So that is fun times, Let's see. All right. From there, we're going to take a look at the Turkish lira. Right there. Oof. Let's look about there. Look at that liquidity situation going on at this point. And it is bursting softly through the weekly as we speak. I guess the relief money is really running out on some level. They have to rebuild Turkey from the from the earthquakes, back-to-back earthquakes. Not post traumas, or what do they call those? After traumas. We actually had 2 different blasts from the sun in our solar system at Earth, and it hit the Syrian Turkish area. And so, that's bang. And for those that are wondering what I'm mumbling about right now, earthquakes are very predictable. And we can give you good predictions on them. Was it Suspicious Observers has a book out, and Observers is with an O, with a 0 instead of an O. And Suspicious Observers is a website that has been predicting earthquakes for a long time, very long time, very successfully. So, all right, we go from there, and let's see what it looks like over on J4X. Let's see, that's what Turkish lira, right? So let's go find Turkish lira here. And there's the Euro Turkish lira. You see it's been trying to move up on the daily too for the last couple of days. We're in a buy from here. And let's put that line in there too. Right there. And there's the daily buy. It's pretty hard to tell in the sense of looking at it. Because look at, that day it closed at 2013.7, and that day it closed at 2036.3, and today it's trading at 2038.1. So I mean, it's a really, it's tight and wild at the same time when it comes to the highs and lows. When it comes to the Turkish lira, like I said, I really do believe that we're probably seeing. The money run out. That's probably what it is, from all the earthquake stuff. So, JA says be wrong is normal, Doc. I know that. I'm right only 85% of the time. Discussion, winning, losing, improving. Main part is win is most cases and prove yourself. Totally, I agree with you 101%. Totally 101%. But I can't imagine being so wrong all the time when you're on a broadcast, and at the same time having people trust what you say, and I see that so many times. Ooh, I just looked over at the screen. Check this out. Look at the. Where's it at? There it is. There it is. Check out this. There it is. No, that didn't do it. Let's try it again. There it is. Look at that. Back up to the 340 area again. They're lifting them, and they're trying to lift them. And I think that as time goes on, and what I suggested, we see a 0.25% increase next week. And at the same time, Mr. Powell, bang, comes out and says, interest rates are now transitory, and interest rate increases are transitory, and that we're going to, we're more towards observing now to see the effects. We've seen what it's done to the economy, and we can see it in our numbers. We want to follow that. I'm sure he's going to come up with a cute story. I can't wait to see it. Let's see. Indeed. So, where are we at now? Okay, it looks like they're trying to make the high of the day. What is the high of the day there? 39.50. We just went to 38.75. Let's see if they find a way to explode through that. As time goes on and people start realizing that interest rates are now becoming in transitory, that may have a good effect. Ooh, let's see. JA says, but I think that this webinar is not to give people what to do, but to teach people how to do. Yes, this is true. To improve people, so you may be wrong. And thank you. that you are improving me. No, I'm not trying to improve you. I'm just giving you a what we call in math a primer. What it is that I give you a key that shows more accuracy than inaccuracy. That's all. Nothing more than that. And at the same time, I like to pontificate about what in other words, if you go back and look at my webinars, almost all of the time, very high percentage, 80, 90s, were usually right on target about future actions by the government and what they're doing. Then it's not that I agree with them. It's that I can tell what they're doing is wrong or right. And I think that's what the webinar is all about. Also to talk about listed options, but unfortunately most people are uncomfortable looking at investments through math. They really like to invest through emotion. And so I like to try to show that investing through math is a little bit more safer than emotion. Things like that. How do you think of that one, Jay? Do you think that makes any sense? But sure, you're presenting what you're buying and selling to you, so you must be right for the money results. Exactly. Well, we have a constant documentation. You just go back and look at all the other webinars throughout the decade. In other words, when the math says be long, 9 out of 10 times it's right. And when it says to be short, 9 out of 10 times it's to be right. And when it says don't do anything at all, 9 out of 10 times it's right about that. So that's the whole objective of the webinar, is basically to show that there are alternative points of view that are not getting out because of the political, I guess you could say, the political maze that has to go through. Mm-hmm. And so that's where we stand at the moment. But look at that. They did make a new high. The high now made it by 50 cents. That's it. Now it is 3,940. Took out the 3,939.50, and then they smacked it down, and dropped 7-8 points. You see our math broke down right here. I guess it is. Yeah. So right here, but it's not much room, and it's already trying to get into the buy on the short term, intraday. So that's kind of interesting, and also it's interesting to show that the primer, our math primer, says that if you don't use the same math for your dailies and weeklies and monthlies, then more than likely your intradays are not going to be. In other words, they have to be basically the same foundation. And without that same foundation, it's usually, that's why a lot of people have problems with intraday versus daily and weekly. People go, well, it's better to invest long term versus short term. Of course, slower is better than faster as far as I'm concerned, especially if you're using the options, and the derivatives and all. Yep, interesting. You must calculate it without emotion. I made a most money through fundamentals where I bought like 30 best from 3,000 best on numbers for the last 15 years. Exactly. Especially with the free put from the government at the same time, helping you out. Yeah. So pure numbers give me advantage. Exactly. But people want to see excitement and some gamey ridiculousness. Yes, I agree with you. And that's all we really try to talk about here, is just basic mechanics, and try to keep the emotion and the risk. Try to control the risk. That's the real important thing. That's why we always say, don't do overnight with a stop, because a lot of times you get taken out. And then how many times have I heard people on this webinar tell me, I was right, I just had to have more money in there. No, you didn't have to have more money in there. You had to use a different vehicle. You needed to do a bull spread, or you needed to do a put spread, a bear spread or something like that, and you wouldn't have been stopped out. And that's the basic mechanics. Here we go again. Look at it. It's getting up towards the highs. Well, they're going to start to find out that interest rates are transitory. That's what they are. They are transitory. All right. From there, we slide over to the two currencies that could be very fascinating this morning, and that is Canadian and the South African rand, and see how they're reacting to the markets. Let's take a look at. There's oil. So you can see oil's down again today. You know, a little weakness again. It's been in a sell for 6 days now. It's here. You know, the weekly is melting away at the same time with no problem whatsoever. It's going to be in a sell with this action. And then we go and we look at the Canadian right here. Where are you, Canadian? Let's go look at Canadian right there. There it is right there. There we are. And there's the Canadian. As oil goes down, so does the Canadian normally go up against the dollar. And we're not seeing that. That's kind of curious. Last 2 days, Canadian has gone down against the dollar, which means it's gaining against the dollar, probably because of the interest rate factor. Or maybe the calamity. I don't know. You know, I mean, we see a 70-80% correlation to that. Now, this one, like I said, it has like a 70, sometimes 65-70% correlation over the months. Maybe sometimes it slips up into the 80s. It's kind of cool. Vacillates back and forth. Now we look at the South African rand right there. And since this is going down, we have to assume the gold is going up. Now this morning when we sent the charts out, I did see gold was moving up. But a little weakness today. You know, just a little weakness, but it has been moving up with the South African rand going down, and that's usually the way it does work. So, and then you can see over here. Let's put that in there. There's the South African rand right there, and you see the pressure on it on a daily basis. It's breaking down, and again, as we saw over here with the oil market, you know, it is also breaking. In this case here, it's the gold market. You know, the gold market is been moving up. Just a little weakness here today. And before that presidential problem that they had with the South African rand, I would have been saying instantly. Let's put it up on the screen here too. There's the South African rand. So since it's down, I'm assuming that gold will go back up again today. So we'll see, you know, gold trying to turn back up somewhere along the day. Like I said, since the problem with the president of South Africa and the politics that had gotten tangled into all this, it was almost like a perfect match. I mean, when the South African rand went down, gold went up. When the South African rand went up, gold went down, and it led gold on a daily basis. But since the politics have gotten involved, it's gotten a little twisted. So it's not as fun as it used to be. Yeah, they give you advantage, you know, JA. The idea really is a combination of good, you know, technical analysis with a little fundamental, but the real trick is the vehicle. In other words, you know, spot versus future versus option derivative. And so limiting your risk and being able to stay in your position is always much more important than anything else. Out of all the three things the two things we mentioned, you know, chart direction, technical analysis, 1, or fundamental information, 2. But the most important thing of all is the vehicle that you use, be it a binary or a an option strategy. All right, and then from there, we dance our way over to, where do we dance our way over to? Let's finish it off with the Mexican peso. There's the Mexican peso. It's been moving up for the last couple of days. It's been reading this issue going on. I guess again a classic, just a classic Mexican peso picking up. There was going to be all kinds of craziness going on here in the States. And let's put it up over here. Right there. Now it's okay, so it's moving down now. It's down and banging against that that extreme 1.62, and you can see we went into the buy off of this one, and it kind of did the little pop. It's flirting cleanly. Last week the fast went into the weekly buy, and now the slow is joining it. And so and so at this point, there's not much more to be said about the Mexican peso, except for interesting the fact that it is starting to back off again. But they obviously picked up that there was going to be some wild and woolly action going on here in the States. It seems like every time politically or anything else is going on, the Mexican peso seems to react faster than most of the news media. Let's put it that way. All right, now that completes the currencies. But if anybody wants to see a currency, just give a shout and we'll go put it up there for you. Now there is gold. We can go through the metals complex and let's see what silver's doing. Right there, unched for the day basically, and in a buy for 3 days. The fast is moving up for the weekly. The slow is trying. We're seeing some good strength in here. Over here on J4X, right there's the silver, doing the same thing on the daily. A couple days in the buy, just like us, right there. And at the same time, let's see what the weekly looks like. There's the weekly right there. And you can see the weekly's doing the same thing. It's trying to turn up. We've got the green line, and now we've got a green hinky there too. So, it's showing us the same strength that we're seeing here, which is nice. I mean, that's the whole idea. And what else can we say about any of those? I guess that's about it there. Then from that action, we slide over to, let's take a look at the coppers market. Copper. Let's see, copper. There's copper. It's in a buy, but it's really anemic. In other words, it's not really jumping around showing any real strength. Let's take a look at it over here. There it is right there, copper. And this is the weekly. And we're the same way down over here. You can see that. We've been in a weekly sell. This is the 5th week. You can see here, what's there, 6 or 7 of these things, something like that. We went into the sell on the stochastic off of the big one right here, off that high. And then a couple of weeks later, we start to get the reds right there. And it's already trying to turn up, same as we are trying to turn up right there with our fast. So this just has to turn green, and for us, we'd like to see this just get through the 0 line and close up there this week. And we'll see what the slow does. That's the green. See how that works. Let's take a look at it on a daily basis. Right there's copper on a daily basis. You can see the same thing. It's kind of flirting on the upside here. You can see the line has been through for 3-4 days now, matching up with our line right there. We're just waiting for these to turn green, and it has just right there. So now it's getting into the buy. Unfortunately, it's a little bit higher, but maybe there's more strength to come. With all the oddity that's going on in the financial systems at the moment, we're in that noisy period of confusion. I'm not really sure how that helps the industrialized world itself, but we'll see. You would assume that if the government becomes a little bit more responsible again, that would help us. In other words, if they get out of the way and allow capitalism to work, then it usually we grow. That's how it usually works. So maybe, we're seeing some firmness in the copper, which kind of always represents China at this point. So maybe that'll help it out. Now, let's dance our way over to the platinum. Take a look at that. It's rocketed itself yesterday. and the weekly was ripping. That's wrong. That needs to be fixed. Let's see if we can fix it by just changing the feed. Let's see. It's here somewhere. Let's see if that does it. Yeah, there we go. That fixed it. So you can see here we're still in the buy from the right here. And we're holding up pretty well. A little weakness here today, but overall it's trying to lift. And we're weekly looks kind of firm also. If we see this closing a weekly buy and gold in a weekly buy, then you have to start thinking we may have some good action for a couple of weeks in the metals complex. Robin and I have been talking about it. Unfortunately, I'm thinking that this is just going to reset the low to a higher low. That's all I think this is going to do. So in other words, you can see here, let's go back to gold. I'll kind of explain it again. Here's gold, and let's tighten it up. So in other words, we had lows of 16 way back here, okay? And then there's a higher low. It didn't take out this, and then it goes higher and takes out this high, takes out this high, and then it plays back down again, but it doesn't take out that low. It's a higher low, and it's higher than that low, and it's higher than that low. And it does it again. When it takes out the high here, the next little sell-off right there doesn't take out these lows or any of these lows. So in other words, higher lows. We get higher highs with higher lows. And I think overall the broader sense is that probably the next time they sell the gold market down, there's a good chance that it only stalls out somewhere in here in the mid 17s instead of going down into the 16s. That's what I mean by that. And so we were talking about that yesterday. The envelope. It seems like there's an envelope, by the U.S. Treasury / Federal Reserve and the central banks around the planet that they're following, trying to keep all these products in an envelope or a channel. And that's what we talked about a little bit yesterday. Is that channel or envelope, is being adjusted to inflation and interest rates all the time. But they're not allowed to step out of it. So, because when they do, then the Secretary of Treasury here in the States can classify you as a, manipulator. God knows how they come up with that one. But anyway, they call it a manipulator. I'm not even going to go into that conversation. That could go on for weeks, trying to define how could you be a manipulator in the 21st century in the QE world. I don't know. Ooh, tough one. All right, so from there, that completes our metals view of things. Let's go check out we saw the energies. Did we see the energies? No, we didn't. Let's go check out the energies. And so here is the spot oil. We saw that when we compared it to Canadian. You see the weakness in it and the sell going on there. Let's put Brent up on J4X right there. So there you go right there. You can see that same weakness going on with the crude oil. And then when we look at, let's see, 72.77 is where it's at right now. See that right there in this box right there? That is the spot month here, April, which is going to expire this week. Now let's take a look at the June contract. Let's go back to the back months. So 72.78 versus 72.96. So it's about 18-cent premium in it at the moment. And we've looked at this and we've talked about this in the sense that, there's the back month premium is a fascinating thing sometimes in some of these products, especially like gold. When we look at gold, I just want to go back to gold in the conversation, but I'm not going to go back to it on the screen unless someone wants to see it. But when you look at gold, April gold right now is trading, $1,911. And this is April gold of 2023, right here. And then when we look at April gold in 2024, it's trading at $103 higher. Not like $10 higher. It's at 2014 at the moment as we speak. So, there's a $100 premium in the back month. And then if you go back to look at of gold in April of 2025, it's trading in the $2,100 area. So it's like, whoa, wait a minute. You're telling me right now gold is basically in futures contracts at all-time highs, basically. Yep. And that's something. But the thing is that their back months can't be exercised. And so that means that they're not willing to sell gold 2 years from now at today's prices. And that's an interesting, fascinating thing that I'm surprised people don't talk about more. But anyway, that's just the conversation of the contango and the premium or discount. And the back month crude is stronger in price. Matter of fact, we've jumped into the 73.08 area now. So when we go and look at front month, it's probably like at 88 or something like that. 87, there you go, 85. So it's moving up also. All right, from there we slide over to Nat Gas. And there's the Nat Gas. It's trying to get into the daily buy. We're in that weekly buy for weeks now. Let's put it up on J4X. Right there. There's Nat Gas. In the States here, we're paying $2.60 some odd cents. This is, you're looking at the next month contract, so it's at $2.71 as we speak. But this is the spot of this month, and this is the May contract we're looking at right there. So it's like 2 months out. Nat Gas is interesting in the sense that here in the States we had a nice run up into the threes, as you can see right there. When we went into that daily buy, and we had the fast in the buy, we were saying go go go, it's going gone, and it was. Now let's take a look at the only way we can view European natural gas is through a Spanish energy company, and let's see if we can find that. It's around here somewhere. There it is right there. And it's probably trading in the 26s. Yep, a high 26s at this point. And that's $26 a cubic foot. Compared to in the States, we're trading at $2.60 a cubic foot. I bet, it wouldn't surprise me that whatsoever that they try to keep them in line that way, just so that they can confuse people. So they can say, oh, no, don't, the United States is 26 also. Oh, okay. Or now look at that, it's 27 and we're at 26. But in fact, we are just $2.71 a cubic foot, and in Europe it is $26.82 a cubic foot. But that's the classic act of the political class to begin with, is to play with numbers to try to confuse everybody. All right, so that completes the energy conversation here today. Inflation is obviously flat. There's not much more to be said about that. And what else can we say about any of these other things? I guess, where are we at this point? I guess we're just like 4 minutes away from the stock market taking its cue to start trading on the exchange, or let's put it this way, live action. Let's take a look at the S&P 500 before we go away. You can see here it's trying to get back up into the buy. The weekly needs to turn. It's been in a weekly sell for just a week and a half, 2 weeks here. So we're looking forward to, if it even attempts to take out the 4,000 area, then I'm assuming that we will see the weekly turn up with it. Let's take a look at the Dow Jones Industrial Average and see what it's doing. Right there. And it's still, it's in a daily, trying to get into a daily buy, let's put it that way. But the weekly's been in a weekly sell now, going on a fourth full week now. So, not too bullish, but we'll have to see. Like I said, there's going to be a lot of confusion and nervousness. Now, if they don't increase next week, people are going to think that things are even worse. If they do increase by a quarter, then they're going to start to think interest rates are transitory, which is a positive thing for the equity markets. But they don't want to look like they're putting their fat finger on it, And so that's what the real problem is. All right, traders, we've had enough fun for the day. Today is interest rate transitory. That's what it is. It's all about that. So, happy trails to you until we meet again. That'll be tomorrow. Happy hump day. Happy trails to you, to all our trading friends. Later, later, traders. Oh, George says, "Oh, still very weak, Doc. I wonder how low it can go." What's that? The stock market? I'll stick around for you. What do you mean? What product are you talking about? Maybe the interest rates. Maybe the stock market. Waiting for George to respond. Crude oil. That's a real good question. You know, I'm thinking that they have something in the Congress going through the Congress right now. It's called HR 1, and it's in the House of Representatives at the moment. And I think they can find enough support to get it through the Senate also at the same time. So Mr. Biden's going to have to veto it. And I don't know if he really wants, he doesn't like to act in the light of day. So he may not veto it. They're going to try to push that that the president can't executive order the halting of business unless it has some type of national census, So that's going to be very interesting. Happy the rest of the day. Thank you, J.A. Yeah, happy trading day. So it's a good question what they're going to do with I think the oil is just trapped right now until we see. I think markets want to see some evidence that the House can do something about the strangling nature of the presidency on the oil industry. And that's probably the biggest question of all is that itself. Does that answer your question? And we'll see. Our math does really good against the energy sector, so we'll have a good heads up if it means something more. Matter of fact, what are they doing? Let's just go back real quick before I run. And that is, there's the crude oil front month. We are flirting with a weekly sell, and we're doing the same thing in the back month, too. So this could be the beginning of, where can we go? Let's see. Where can we go? You can see it flatlined in this area here. It seems like 70s, 68s area seems to be big support. So I guess what we'll see is see if it breaks down in there. It would be nice if it did. There's a real strong push. Well, we'll keep on top of it. All right, traders. Everybody have a safe and smart trading day, and we will catch you tomorrow. So, happy trails to all.